Thanks so much for tuning into the Trade Setup. Good morning to everybody. Not the best of cues from a bull's perspective, but let's try and analyze. We'll get all the data on the charts towards the end of the Trade Setup. I'll just start off with the big newsmakers that, according to me, that I see. So NASDAQ, of course, suffered its worst week since March 2020, dipped for each of the last 7 days. The crypto sell-off pushed Bitcoin to 6-month lows. It's bounced back a little bit, but certainly nowhere out of the woods as yet. Goldman Sachs says EM economy is poised for a stronger growth in 2022. And one line that we haven't given here, but something that's come up this morning, is the United States has ordered families of diplomats out of Ukraine, citing war risk. For US to take such a step, is it a precursor to some bit of how do I say, some bit of action from the Russian side, hostile action from the Russian side, which may impact commodities, which may impact the markets a little bit, remains to be seen. Certainly, the SGX Nifty is showing that, and we'll get to those numbers in a bit. First, let's look at the trade setup for the day today. I suspect that unless something really worsens on the geopolitical front, and if the SGX Nifty's fall today is purely on account of what's happened in the US markets on Friday, and mind you, the US futures are up today, then we are kind of approaching levels from where there could be some bit of a pullback. We are not there as yet. Can it happen today? Can it happen tomorrow? Sure, it could, because it's been a one-way sell-off, even in bad news days, unless it's, of course, a COVID pandemic announcement. I think there could be some bit of a pullback, but maybe not today, maybe tomorrow. Let's wait and watch. It could well happen ahead of the event or just on the day of the event, wherein everybody's believing that the Fed will sound very, very hawkish. Could the US Fed commentary come in and actually surprise slightly positively? That's the question, because a lot of it is baked in, by the way. I mean, Goldman has gone out and said, oh, there will be 4 rate hikes. Somebody else has said that there'll be a rate hike each of the next 4 meetings. Could the Fed sound slightly more different than what people believe? Let's wait and watch. I think tech may continue to bleed, but some stocks are now at very attractive valuations. We've seen mid-cap and large-cap tech, save for TCS, being taken to the cleaners the last few days. Even in Friday's session, wasn't the prettiest. But some of those valuations are now starting to look attractive, despite the fact that they had run up. I mean, stocks like HCL Tech or some of the others in the mid-sized end as well are decently priced, you would have to say. Some of them, at least. There will be some traction in ICICI Bank today, and it's my stock of the day, of course, and we'll talk about it why. But it's very unlikely that ICICI Bank sparks a big pullback in Nifty Bank. That's, of course, the big index that everybody watches out for. Can ICICI Bank do the trick alone? I doubt, really. The Fed meeting on Wednesday, and like I said, it's very unlikely that the fears of that will stoke nervousness. And I believe that unlike fears of stoking nervousness, it may actually help equities. Let's wait and watch. I may be wrong, really. Who is to know? I mean, you might mock me as well right now, saying that while I'm saying that nobody knows, why am I putting out this line? Frankly, nobody knows what the Fed will say, right? But somehow get a gut feel there. Securities in ban, 24th Jan, BHEL, Escorts, Indiabulls Housing, Idea, and Nalco. So those are a few stocks that stay in the ban. And some results today that everybody will be watching out for. I reckon Axis Bank would maybe come out post-market hours. But SBI Cards could be interesting. Very interesting could be Shriram Transport Finance. We'll watch out for Deepak Nitrite. And I think the announcement around the fundraising could come about as well. They've already said that they want to do the fundraising. Some details could come out there. IEX could be interesting, as would be IFL Securities, by the way. A lot of brokerages like Angel One, etc., have come out with very good numbers. IFL Securities is not exactly the discount broker, but let's wait and watch what it does. And IndiaMart Intermesh, especially in wake of the kind of salvo that Just Dial is firing, as you saw with some of the brokerage notes, the kind of deals that they're giving to some of the others, some of the businesses. JD Mart is now proving to be, or starting to look like it could prove to be, a worthy competitor to IndiaMart Intermesh. So can the leader, which is IndiaMart, thwart the JD Mart challenge, which is backed by Reliance? Or can IndiaMart do the, or will IndiaMart succumb? Well, I think maybe this quarter's numbers don't show that, but it'll be interesting to see what the commentary of IndiaMart Intermesh is, if they give one, by the way. Let's move on to the stocks, and then we'll, of course, go to the charts later on. But the stocks first. I think the stock of the day has to be ICICI Bank for more reasons than one. Of course, the numbers really strong. So look at that. Net profit 6194 crores versus 4940. NI at 12236 versus 9912. And the asset quality, which I tend to look at on a quarter-on-quarter basis, simply because that's a more moving picture and not as seasonal, considering what's happening in the economy. GNPAs come off quite stupendously to 4.13 from 4.82. Net NPA 0.82 versus 0.99. Quite stunning, really, what ICICI Bank has done. Now look at the internals. The core PPOP growth for ICICI Bank at 22% YOY, driven by strong margins, which were up about 30 basis points, by the way. ROE above 15% for the first time in 28 quarters. Gross NPA ratio, as I showed you, 25-quarter low. Net NPA ratio also is at some multi-quarter low, really. The CASA ratio is at 11-quarter high of 47.24. To put it into perspective, HDFC Bank, which used to house all salary accounts, and in my case still does, by the way, their CASA is at 47.1. ICICI Bank is at 47.24. That's quite stunning, really, what ICICI Bank has been able to do. Well, people are calling it, oh, is it an HDFC Bank? The question to ask is it setting its own benchmark now, and will others have to follow? Well, CLSA believes that the re-rating for ICICI Bank would continue. They've raised the target marginally to 1125 from 1100, but the results impressed CLSA so much, and impressed the other banks so much as well, by the way, that they're forced to raise the target even more. Even if it's just 25 rupees from the earlier target price, but from the current market price of 800 and circa 800, that's quite a bit of an upside. They say that the ROE of 15.5% in spite of conservative write-offs imply that on a core basis, the ROE is actually 16-17%. They expect an RORWA of 3%, 40% higher than the previous upcycle, and very similar to HDFC Bank. Again, the reference to HDFC Bank. And they say it deserves premium multiples and should not be benchmarked to its past cycle. I thought this was the key point. Stop benchmarking ICICI Bank to the past cycle, because this ICICI Bank under Sanjay Bakshi is charting a very different course to the previous avatar of ICICI Bank. Lest I sound too bullish, I'm just echoing what the other brokerages are saying, but it's a really good number. Let's wait and watch if ICICI Bank has some upsides to itself today, despite the market looking weak. I suspect that it could. Let's wait and watch. Some other stocks to monitor. Reliance Industries, largely in line with estimates. So revenues, EBITDA, net profit, all of them compared to the previous year, doing very well. I thought the Morgan Stanley note in a short way summarized it very well. The overweight with the target price of 2925. Morgan Stanley says that all businesses for Reliance Industries except chemicals showed a quality beat. I think that's the point. That's the word to be used. The quality beat that they spoke about, which is pretty interesting. And they of course speak about how the O2C business is strong and had multiple triggers ahead. They say that there's a significant pickup in the retail margins, and the earnings upgrade story is firmly in play. So those are the reasons why they are overweight with the target price, as I said, of 2925. Pretty strong, viewers. They of course, so the note, viewers, also says that their earnings beat was driven by higher telecom ARPUs and multiple other things, and the telecom subscriber churn was a key negative. But the earnings upgrade story firmly in play, and the NAV is next, according to Morgan Stanley. So let's wait and watch what happens to Reliance Industries in the session today. Like I said, on almost all counts, as I read the note, it's very positive. Let's wait and watch if Reliance and ICICI Bank can give a bit of a supporting hand to the market at the lower levels today. Mind you, US futures are higher. JSW Steel, the numbers were weak, but I thought largely in line with estimates from whatever I read of the brokerages. So revenues up 17%, but much higher than estimates, of course, 38,071, but lower than estimates were the margins at 23.9 versus estimates of 25.6. Net profit down 40% to 4,357 crores versus 4,872 crores. So the numbers certainly lower than estimates, but most brokerages say that they were in line with estimates. They're lower than Bloomberg estimates, viewers, let me tell you, which is the aggregate. 2 or 3 notes that I read said that they are still bullish on JSW Steel because they will have a large capacity funded entirely out of internal accruals by FY24, and they believe that a 6 times EV EBITDA multiple for FY24 means that the target price is higher. Let's wait and watch. Bandhan Bank, a bunch of brokers are actually bullish on this one after the numbers. So MOTILAL OSWAL says that the bank has been seeing healthy collections in the NPA and the restructured pool, which will help limit the losses. The collection efficiency, including arrears, has increased to 154% during third quarter from 111% in quarter two. They raised their FY23-24 earnings by 5% and estimate Bandhan to deliver 25% ROE by FY24. They, of course, remain watchful of asset quality outlook and maintain the neutral rating with the increased target price of 320. I think Kotak too has added to the target price of Bandhan. So that is something that that maybe people should watch out for. I'll just tell you very quickly. CLSA, sorry, has upgraded the stock to an outperform from a sell. The target price has been raised to 340 from 245. Do watch out for that one. Some other stocks, viewers have missed out on Sharda Cropchem, but the numbers were very strong. Sales were up 37% QOQ, 78% YOY. PAT splendid, over 100 crores versus quarter on quarter 32 crores, YOY 48 crores. So watch out for Sharda Cropchem, pretty good set of numbers. Some other names include Share India Securities, small stock. I don't know much about it, but just that the profit after tax was up about 178%. And yeah, ONGC, sorry, OVL has cited a major gas discovery in the Brazilian block. Now, you will also watch out, ONGC, OVL, etc. should all be in focus because the point is, if indeed the Russian conflict flares up, then crude might flare up, and that might have an impact on ONGC, Oil India, and the like. So do watch out for ONGC today. There are some buy calls on SBI Life and HDFC Life post the numbers, so keep that in mind. Now, viewers, very quickly, just bear in mind, we'll show you 3 or 4 charts. Keep in mind that Asia and SGX Nifty are probably showing a bit of a downtick, but the US futures, US markets ended weak on Friday, but the US futures are trading in the green. So keep that at the back of your mind. However, for now, Asia and SGX Nifty, both of them will come up on your screen next. They're showing a red. I mean, almost all the indices without an exception. Look at the lowest column, Nikkei, Hang Seng, SPX, ASX, CSI, all of them in the red. And the SGX Nifty, at least the first time that I checked in the morning, was down about 150 odd points. I don't know if it's recovered a little bit in line with the US futures. We should pull up the SGX Nifty and just see what that is showing in the session today. I suspect it'll start off weak. Like I said, the indicators haven't, 150 odd points. We're not quite there as yet, but maybe with this fall and maybe with another 100 points, we might be in the territory wherein people would start expecting a bounce back. So let's wait and watch. Tech continues to bleed. NASDAQ, as I said, has corrected. There's a wonderful chart which shows how NASDAQ has corrected 1% every day of the week last week, which is a bit of a rare occurrence, really. It's not happened in a long time. So pretty interesting what's happened to the NASDAQ and the kind of corrective move that it has had. So that is something that we should watch out for. And there's one more chart, which is how, while there is so much of gloom and doom currently, this one. Thanks, Virat, for that. In years of Fed rate hike cycles, in the average annualized return for the US markets is actually positive, say for one instance, 1972 to 74. Can you believe that? That is one. And usually the run up to the meeting, which is the March meeting, is actually positive. Let's see if we have a repeat this time around, or does it change? But thanks so much for tuning in. Have a safe, profitable day ahead. If you're stepping out, please do stay masked up, and happy trading.